Good evening, everyone. Today is February 24, 2026. The US market has been closed for a while, so let's take this time to review what we've seen so far and share my personal outlook for what may come next. All three major indexes closed higher today. Despite the pressure from panic sentiment and waves of negative headlines, the market is still moving in a high-level consolidation range. Prices are holding near the top, but volatility remains elevated. The reasons behind this high-level consolidation are actually quite straightforward. First, there has been strong pressure from short-selling instruments and hedging tools. These tools are continuously squeezing price action, preventing a clear breakout while also limiting deeper downside moves. Second, there were several fundamental developments today that influenced the market. One important piece of news was that Anthropic announced new plugins. The message they sent to the market was clear. They are not trying to disrupt the traditional software industry, but rather to empower it and help it grow stronger. In my view, that narrative serves more as a psychological comfort for the market. As I've said before, AI is not something that might disrupt the traditional software service model in the future. That disruption has already begun. It is happening right now. This is not a question of if, but how fast. So for the software services sector, this announcement does not fundamentally change the trajectory. If we look at the software services index today, we can see that after a significant decline, there are still no meaningful signs of recovery. On the weekly chart, the sector is in a deeply oversold condition, and that state could persist. It may even erase the entirety of the previous rally. We can notice that prior support levels have essentially lost their significance. Why? Because after three major waves of upward movement, and for those familiar with Elliott wave theory, you'll understand this structure, the most recent rally at the top has already been completely retraced by the current downward move. When that happens, it becomes much easier for price to break lower. The broader trend has already reversed. The overall structure has shifted. So when we hear that Anthropic's plugins will help traditional software companies grow stronger, I see that more as market self-soothing than a structural change. AI replacing the original software service business model is not speculation. It is not a distant possibility. It is a structural shift that is already underway, and that reality should not be ignored. Now let's take a look at the NASDAQ. Whether we're looking at the NASDAQ or the S&P, both are currently moving in a high-level box consolidation pattern. Price is fluctuating within a defined range near the top rather than forming a clear directional breakout. I'll remove the previous lines we drew. What we're looking at here is a short-term Fibonacci retracement. Price has already tested that retracement level. It has touched it. So what are the possible scenarios from here? Once a key retracement level has been tested, it often doesn't need to be tested again immediately. From here, price could either follow the trend upward, or if momentum fails, it could move down to test the lower level again. These are the main possibilities. However, in my personal view, the highest probability scenario is continued consolidation at these elevated levels. We may see a slight false breakout to the upside to trap long positions, followed by a slight false breakdown to trap short positions. Repeated back and forth movement within this range. Now let's go back to the index we mentioned earlier, the S&P. Let's look at the daily chart. It's very clear that what has formed here is a high-level rounded top consolidation, a rounded top structure at elevated levels. Going forward, the higher probability scenario is that price continues shaping this rounded top right here, continuing to build out this arc structure. Now, within this consolidation, an upside breakout is still possible. That possibility is there, but the next few days will be critical in determining direction. This trend line is actually very easy to draw. Take a look at this area. We can draw a support level here, a short-term support level, and we can keep adjusting it upward because there are multiple touch points in this region. There's 1 point, 2 points, 3 points, 4 points, 5 points. So you can keep fine-tuning the line upward as price reacts. However, its ultimate limit, the core pivot, sits at the center of this structure, which is the line we are drawing right now. The midpoint of this line is around 6,725. Around 6,725, that's the central pivot. So the higher probability scenario is that after moving up, price will pause here for an extended period of time. It will likely stall here for quite a while. And during that process, there will definitely be volatility and consolidation. The only thing we need to focus on is this key level. To the upside, we focus on the key breakout level. If price decisively clears that level, the bull trend continues and extends further. But if 6,725 is broken to the downside, we could see a high intensity correction. This current uptrend has been running for a very long time, since around April of last year. It has extended significantly. If this move finally breaks down, the next major support zone sits near 6,100. That implies a wide and prolonged range of movement. Personally, I am not very optimistic about the sustainability of this structure at current levels. I already told everyone 2 weeks ago, when the Dow Jones Industrial Average pulled back from 50,000, the alarm had already gone off. Once that alarm was triggered, the overall market began to feel increasing pressure from negative headlines, especially AI-related panic. That pressure has been hitting the software and services sector hard, particularly through concerns about the labor market. And this kind of impact does not immediately show up in employment data. Whether it's Federal Reserve officials, the US government, or global policymakers, the data won't reflect it right away. For example, both Japan and South Korea looked strong on the surface today. The Nikkei 225 and the Kospi were broadly positive. But if you look carefully, you'll see that those markets have already been rising for a very long time. This is not a short-term bullish catalyst being realized. The bullish momentum has been in place for quite a while. What is the market waiting for right now? It's waiting for negative news. That's why at these high levels, everyone is putting hedging tools to use, creating compression in the range. I'm hedging with options, I'm hedging with ETFs, and above the market, there are a large number of hedging instruments actively pressing on this space, especially on the NASDAQ. We all know the possibilities. Either the box breaks upward or it breaks downward. Once the range compresses like this, everyone is waiting for a catalyst. And when you're waiting for news at elevated levels, you must focus on the bigger narrative. Are the upcoming catalysts more likely to be bullish or bearish? And tomorrow, there is a very important event. Nvidia will report earnings. At the moment, expectations lean slightly positive. On Polymarket, the benchmark being discussed is GAAP EPS of 1.52s. If earnings exceed 1.52, that's considered a beat. If earnings come in below 1.52, that's a miss. In my personal view, it is very unlikely to come in below that number. This year, many major tech companies have been placing significant orders, but its earnings will directly influence whether the market's concerns about a bursting semiconductor and AI bubble intensify over the next couple of days. Here's the key point. If Nvidia beats expectations, that's simply in line with what the market already expects. But if it misses, the impact on the market would be extremely significant. That's why we've repeatedly emphasized you must understand the potential black swans along the main market narrative. Always ask, what is the possible black swan? From a price structure perspective, as we've analyzed many times before, Nvidia has been moving in a very resilient upward trend, but within what resembles a head and shoulders topping pattern. However, the head of this head and shoulders structure is extremely elevated and quite dangerous. According to traditional technical analysis, patterns like this, more often than not, eventually break down. They break below, they break below, they break below. They almost always break below. In other words, the probability of a breakdown is very high. The question now is whether it can break above that head in the short term, perhaps driven by a strong earnings surprise tomorrow. But if earnings even slightly miss that 1.52 expectation, then price could quickly move lower. So fundamentally, this is where the market stands today. From my perspective, it's still too early to be overly optimistic. When participating in the semiconductor and AI theme, do not be overly optimistic. The alarm is still active. Previously, I mentioned escalating from level 2 to level 3, from level 3 to level 4. Today, perhaps we step down slightly to level 3, but it is still a strong warning level. So position control is critical. Position control is critical. That said, it is not yet the stage for aggressive large-scale shorting of the semiconductor index. If you look at the semiconductor index right now, the structure is actually very healthy. Very healthy. It is positioning itself for a potential breakout here. And that's because the semiconductor industry is fundamentally different from the software services sector. Today, let's also talk about another sector, the memory segment. Previously, we recommended MU, Micron Technology. On the daily chart, Micron formed a pullback today. The reason is that SanDisk was reportedly targeted by short sellers. You have to understand something about memory. The internet has 4 core pillars, and with AI, there's an additional one. Traditionally, the internet is built on computing, communication, and storage. With AI, you add energy. So it becomes energy, computing, communication, and storage. That's why storage has always been a key sector within the broader internet industry, one that investors consistently pay attention to. The earnings visibility in the memory sector is actually very high, but it has a defining characteristic: extremely strong cyclicality. Extremely strong cyclicality. When the market reaches saturation, the downturn in this sector can be very sharp and very aggressive. So regarding MU, if you're following it, you can choose to wait, or you can consider trimming some positions now and wait for a deeper pullback. Since a leading SSD player like SanDisk is already being viewed negatively by the market, that could generate short-term bearish sentiment across the storage space. At this stage, it may be prudent to step aside temporarily, manage risk, and wait for the stock to pull back to a more attractive level before re-entering. Another stock we previously recommended is Vertiv. Vertiv has been extremely strong. Extremely strong. We mentioned earlier that Vertiv is the essential engineering backbone behind edge data centers and advanced AI computing centers. What does it provide? Liquid cooling. Liquid cooling is critical infrastructure. Even Bitcoin mining farms now require liquid cooling. If you don't implement liquid cooling, your machines can't reach optimal utilization rates. So in the liquid cooling space, Vertiv is a clear leader. Looking at the long-term trend, whether it's Bitcoin mining, AI computing centers, or edge computing, at least until something like building data centers in space, as envisioned by Elon Musk, becomes reality, liquid cooling remains a necessity for all high-performance computing centers. That's why Vertiv has shown such strong performance. We recommended it quite early. After our recommendation, the stock saw a gap-up move. Most of you should have captured solid gains. And this is still a name worth holding in my view. Why? Because when everyone is rushing to mine for gold, Vertiv is the one selling the shovels. And even if the gold rush cools down, the shovel seller doesn't suffer the most. They're not the speculative investor. They're the infrastructure provider behind the investors. That makes it a very compelling underlying asset. Now let's talk about Tesla. Tesla. We've emphasized this repeatedly. Tesla still carries strong investment value. If you understand technical analysis, take a look at Tesla's weekly chart. You'll see a zigzag upward structure. The compression space in this pattern is actually very small. This zigzag movement is taking place within a much larger consolidation range, a much larger range. Once it eventually breaks out upward from this broader range, what will it look like? It will look similar to previous breakout structures. If you shift your focus back and observe historical patterns, you'll see that price may appear to have already risen significantly, with prolonged large-scale consolidation. But once the breakout happens, those prior oscillations suddenly look small. Why does this happen? Because the current oscillation reflects sufficient chip rotation and strong market participation. There's active trading. There's confidence in its future. That's what creates this type of zigzag consolidation. In contrast, a straight line, one-sided rally often signals risk concentration. Don't automatically assume that every one-sided rally is incredibly powerful just because it goes straight up. Don't look at that kind of vertical move and think, wow, this is amazing, or feel like you've completely missed the opportunity. What really matters is what happens after that one-sided surge. After a strong directional move, how does the structure evolve? Does it form a healthy zigzag pattern with large-scale consolidation, or does it sharply retrace, like we just discussed with IGV? If, after a major rally, the pullback exceeds half of the entire prior gain, then the structure is effectively damaged. The trend is broken. That is no longer a healthy pattern. That's exactly what we've seen in the software sector ETF. And the contrast is very clear. So for Tesla, my view remains the same. Continue to hold. Hold your position firmly. That's all for today's discussion. Tomorrow, we'll closely watch Nvidia's earnings and follow additional developments. Click subscribe, and we'll continue analyzing together.